The markets are up, but what's it looking like to you in the medium and longer term, Rahul?
Thanks for having me, Siddharth and Abha. Good to be speaking with you guys, and a very happy Diwali to you, your family. Thanks for having me. So I think, Siddharth, if you see, the Nifty was at 7,500 and it moved to about 18.5. At the cusp, obviously, there's a lot of uncertainty, from a military angle, from an economic recessionary standpoint, already angle. So my sense is money making will not be as easy in the next as it has been over the last 15 months or so. There will certainly be opportunities, price point there are, but I think investors need to calibrate their returns. I would be very surprised to see if the Nifty made a dash towards 20,000. It's just about 10 or 15%. But I'd be quite surprised to see if in the next 12 months we did make a dart there. Obviously, eventually these levels will be taken out, but my sense is over the next 12 months, we need to be a little more moderate and tempered in our expectations, because I think the challenges outweigh the opportunities at this point of time, in my opinion.
Rahul, what's your best approach for a retail investor? Because, even if I take a look at some of the stocks that are doing really well today, I mean, there's some very expensive stocks, and Aisha, for example, some of the heavyweight banking names, the perpetual favorites, HDFC Bank, Axis, for instance, Nestle, again, a super expensive stock. So what does a retail investor do if they want to still jump in with a promise of some return over the next year?
It's a fair question, Abha. I think the way to look at it is, if the global economy is going to enter into a recession/slowdown, best to stay away from export-related sectors. And the fact that commodity prices are still a bit on the higher side and you have a depreciating currency, I'd probably stay away from commodity producers as well. The focus, I think, should predominantly be on domestic stocks. By that, I mean you could play through BFSI like you were discussing, which is a consensus call at this point in time through ICICI Bank and the likes. But next year we get into a pre-election year. So I think, you're going to see a lot of government spending come through, and cement could be a reasonable second order beneficiary. So you could play through names like Ultratech, Nuvoco. These are certain stocks that we like at our broking house, names like JK Lakshmi. And obviously, because it's a pre-election year, and I think, you'll have employment go up, it could have a second order impact on consumption as well. So you have names like Lever, Britannia, etc., that have not done too well over the last 12 to 15 months. You could throw in a Dabur. I think there's an interesting play there. So I think cement, banks, FMCG, and to some extent, the bottom of the pyramid, auto. So two-wheelers, names like Hero, TVS, Bajaj, those could be interesting plays as well. So I think keep the focus domestic. Even within pharma, I think domestic pharma plays like Cipla could be an interesting theme to play. So that's the way I would look at it. Stay away from commodity producers right now. Stay away from export-related sectors. Keep the focus slightly more domestic consumption, and play the government spending theme pre-election via cement, names like Ultratech and Nuvo.
Rahul, what about the PSU pack? We saw some of them come back after years of being in the wilderness, really.
It's an interesting observation, Prashant. And Siddharth, if you read Prashant Jain's article that he wrote when he left HDFC, it talks extensively about his investments into PSUs and how they underperformed over a period of time. And it was a fascinating read. Obviously, valuations are very, very supportive, Siddharth. I think whichever way you analyze it, whether it's in power utilities, PSU banks, defense, it could be a very, very interesting play in the backdrop of Atmanirbhar Bharat. I think if you look at SBI and the way it has done remarkably well off late, along with the private sector banks. So I think on a case-to-case basis, because you are also looking at a pre-election year, like I was saying, it's very possible that the next budget has a slightly bigger thrust on disinvestment, and you do see names like Concor, etc., go through, which have been spoken about for quite some time. And obviously, we've been hearing what the government wants to do with companies like Hindustan Aeronautics and BML and the likes. So I think there is a bigger play here, whether you look at, like I said, defense, power utilities, or public sector banks. I think the good part, Siddharth, is that during COVID, corporate India has cleaned up its balance sheet in a very material way. Debt is down to, the lowest levels in years. Cash flows are at the highest levels, and utilization levels are very good. So corporate sector lending will happen. And I think for a lot of PSU companies, their first retort will be to PSU banks. So I would be a buyer in quality PSU names across these three sectors: PSU banks, PSU defense, and PSU utilities.
Okay, that's a fair point, Rahul. and a fair strategy to go by. You mentioned, of course, cement. I'm wondering what your take is on real estate, because while we may not have seen it perform the way it was expected to this year so far, are you still on the optimistic side in terms of the sector really delivering as we go along?
Deepak Parekh has been saying for the better part of the last 6 months that the kind of demand he's seen in real estate over the last year and a half through COVID, he has never seen in his career. And that, I think, is being reflected in the pre-sales numbers and then eventually converting into quarterly sales numbers for a lot of these guys. I think the fact that work from home took off in such a big way, and a lot of companies in India today still practice the hybrid model, I think real estate demand is here to stay. It has come back as an aspirational product. And the concept of and a half, which was probably not there pre-COVID. So now you actually have developers who are selling 1.5 BHKs, 2.5, 3.5, and the likes. And that and a half probably gets converted into some kind of an office room, which was probably earlier, like a puja room in a 2 BHK or something like that. So I think this demand will probably sustain. I think there is an entire replacement demand that will come through for people who were owning houses for the better part of the last 10, 15, 20 years. I think when you look at the kind of quality development that is coming up in a fairly time-bound way through RERA now, you have most real estate projects from groundbreaking to completion happening in a period of 4 to 5 years. I think it is now a very interesting play. The only caveat here, Abha, being that I would not go all in. I would look at the balance sheets very, very closely. I would look for companies that can either manage their leverage very well or practically have no leverage. So probably stick with the names like maybe a Shobha Developers, Prestige, Godrej, Oberoi. I think those would probably be better bets, maybe a Brigade Enterprises from South India as well. These are 4 or 5 names that come to mind where balance sheets are good, demand is good, pre-sales is strong, and we really like what they're doing in terms of a mix from all angles, residential, retail, and commercial. I think retail and commercial in terms of, the kind of output will probably still take some time to come back, but these companies will sustain the residential part of the business in the short to medium term.
Rahul, the last couple of years have also been the story of the markets seeing a whole lot of new participation. Everyone came into the markets because there was money to be made. And now many of those first time investors will have started feeling the pain and realizing that it's not a video game. What should they do? How should they look at their portfolios and try and remain in the green?
So I think the way to look at it, Siddharth, is that there will be corrections. Going back to my original point, I don't think that the market, while I don't think that the market has enough evidence to go to 20,000, concurrently, I don't think the existing news flow can help us break 15,000, which was the low we hit a few months back in Nifty. So I think it's predominantly going to be a range-bound kind of a market. If you have quality stocks and they're down 15, 20%, I would say average. Because if things turn around in a year, the kind of delta you're going to see on those stocks will be amazing. You may go through a very trying period. Reliance had a 10-year consolidation. Hindustan Lever had a 10-year consolidation. I'm not saying these kind of stocks will have that kind of consolidation, but if you have to go through 6 months to a year and you have good quality names to go by, I would say remain invested. I would say wherever there is leverage and losses, you could probably look at exiting those companies and getting into companies with stronger cash flows. But I would not be too perturbed if I was a retail investor, if I saw a bit of a fall in the market. The good part, Siddharth, is today, the size of the mutual fund industry is 8 times what it was the day demonetization was announced. So I think there is a huge amount of cushion, if the market was to fall, where the retail investor can come in and support the market. So I don't think there's any need to panic. It's not going to be easy, but I'd say if you have quality names in your portfolio and the market was to give you opportunities on the way down, the best strategy would be to average out.
But let me come back to Nestle, because it's I think just in the last couple of sessions and especially today, Rahul, do you think this is just the festive spirit or something more to it?
Results were excellent, Ava. I think they've recently declared the results and they were a beat on pretty much most parameters. The thing about Nestle, Ava, is that it is not a cheap stock. But what it has going in its favor, that it is one of the very few companies in India with the kind of return ratios that it has. I think the return on invested capital is way north of 100%. And the return on equity and capital employed as well is as close to three digits as you get. Probably COVID is something that rivals it. So I think the fact that the point we were making a little earlier about consumption coming back in a material way and, us going back to consumer staples, Nestle, along with Lever, Dabur, some of the other names could be a huge beneficiary. This little bit of an up move that you're seeing, I think, was on the back of the fact that it had a very strong set of results. At our broking house as well, we're projecting the profits to compound by at least 15% over the next 2 years. So, this is one of those companies, Abha, that you want to buy, keep in your portfolio and just forget about it. And I think it's just, you don't even need to look at selling them. It's something like an HDFC or a TCS or something like that. It's that high quality that you don't want to mess with names like Nestle. So I think it started off with results, but like I said, I think it could be a little bit of consumer flavor overall, sort of aiding the stock.
Talking about consumer, and your point well taken on a Nestle, talking about consumer and shifting track to auto and what's happening there. So even though we're starting to see things pick up for the sector, it's also an interesting play from the point of view of new energy, EVs, and really perhaps some of the ancillary plays that could be catering to that dimension as well. Would you pick anything from perhaps the broader markets that would answer that question? Because that really seems to be the area of growth. That's what's driving an M&M, for instance, right now. That's what really a lot of the unlisted players are coming to the market with.
So Abha is still relatively virgin territory in India compared to, say, what's happening in most parts of the developed world, and included in that. While announcements have been made, capacity expansion plans have been announced, capital has been allocated. Let's take a look at Hero, right? They've just recently, a couple of weeks back, launched their first EV product in India. Of course, at the luxury end, you do have Mercedes that has launched the EQS 580 as well. So you've had EVs get launched at literally the bottom of the pyramid and at the highest end of the pyramid. My concern is what kind of demand growth can you pencil in? And hence I say we're in good territory, because it's a little difficult to predict exactly what kind of numbers these guys can do, because we still don't have the charging infrastructure to model it in for the next 2 to 3 years. I've had this chat with my auto analyst, and he struggles with, what kind of sales numbers to assume. And probably that's, something that all auto analysts in India are struggling with, because you really don't have the charging infrastructure in place just yet, as opposed to conventional CNG for that matter. When you talk of autos, obviously, you have TVS and two-wheelers, Mahindra, as you rightly spoke about. Tata Motors is trying to do its own thing. So we'd be buying in names like this, but I'd probably stick to some traditional names like an Ashok Leyland or maybe even a Hero MotoCorp for that matter.
If you like the video, do like, comment, share and subscribe.